So today I'm going to talk about TAG Oil. I'm the CEO, Toby Pierce. TAG trades on the TSX under the symbol TAO. We've got about $40 million market cap. I'm here around the conference. It's going to be a fairly quick presentation. This presentation is available online. I've got many copies at the booth, booth number 12. So TAG Oil is about 90% New Zealand, focused on the Taranaki Basin. We produce about 1,150 barrels a day in New Zealand currently. Primarily oil, about 90% oil, and light sweet crude. We try and own and operate our infrastructure. We've got at least 70% stakes in everything we have. We have a block that we recently picked up in Australia. We do about 20 barrels a day in Australia and our ongoing exploration activities there. The reason we like New Zealand and Australia are the fiscal terms, the ease of access, the ability to work, and generally good political environments. So a snapshot here, working capital at last quarter was $12 million. We have no debt. We're in a good position that way. Our break-even cost, including G&A, is $35 a barrel US. If we include maintenance capital in there, it's $45 US. So that's everything to keep our production flat, more or less. Our exit guidance is 1,300 barrels a day with an average of 1,200 barrels a day for this year. We've got 4.1 million barrels of 2P reserves audited by ERC Equipoise for a $78 million after-tax NBV10 value. We have multiple opportunities, infill, exploration, the full gamut from high risk, extreme high risk, to very easy, simple operations to get in and enhance production. We've been active in picking up other opportunities and evaluating other potential acquisition targets going forward. The team, Alex Cuida is the founder and chairman. He owns about 7%. His business partner owns about 5% of the company. Management insiders own 15% total. Myself, a geologist and by background, and analyst in the city here in London for the bulk of my career, and then joined TAG Oil in 2015. Henrik Lundin, COO, reservoir engineer by training, worked at Statoil and then the Lundin group of companies. Quickly running through Keith Hill, many of you probably recognize Keith Hill, CEO of Africa Oil and part of the Lundin group. And worth special mentions, Dave Bennett. He's our technical director with approximately 40 years experience in New Zealand and Australia. He's been responsible or involved in 80% of the discoveries in New Zealand. You can see our production base over time, fairly level. We'll need to get back growing this as we come out of the downturn in oil prices. We feel anything over $65 a barrel is about the phase we need to start tackling and growing again. You can see the strong operating netbacks over time. We only had one quarter where we had negative operating netbacks, and albeit very briefly, about 10 days, given the $35 barrel break even. These are our core assets, the Cheel field. They've been on production now for approximately 10 years. Significant running room here. We've got 10 to 15 infill locations we can go after. There's uphole opportunities. Typically there's six zones you can produce from. Most wells we've only produced from 1 to 2. So we've got lots of running room here. We've got good data across our entire acreage suite, 3D seismic, approximately 40 wells now of well control, and good infrastructure, easy to expand. We implemented a water flood over the last year, and we should start to see the results of that over the next 12 to 18 months. We're injecting about 4,000 barrels a day of water currently, and wells have been on now the injection wells have been on for 3 to 6 months. We're just seeing positive indications of that production. This is a pilot we did in a well pair. We managed to take our production from 50 barrels a day up through 150 barrels a day. We're hoping that we have similar results in the bigger fields, but we'd be happy with a doubling of our reserves and a doubling of our production rates. Cardiff, a very big gas prospect that sits below our Cheel field. We are in the process of farming this out currently. Negotiations are ongoing. We do have interest. This is a very deep, difficult gas target. The analogous field is Kapuni that Shell drilled back in the 60s and 70s. It's produced 1.4 TCF to date. It's well beyond our capital base. Typical wells are 15 to 20 million US, but lots of potential here and a very big target if we could ever unlock it. Sidewinder, we produce about 250 barrels a day from Sidewinder. It's mainly oil. The key here is there's lots of running room in the acreage to the north. We see significant gas targets, oil targets. We're going to shoot 3D seismic next year and process that 3D seismic based on what we see from the, and sort of pick our targets from what we see on the 3D seismic. Supplejack, we tested this this well in November of last year. It tested 7 million cubic feet per day. It was bypass pay. It turns out the accumulation is relatively small, approximately 2 to 3 BCF in size. We will look to put this on in 2018. There's some good potential and good paybacks. Gas prices in New Zealand are anywhere from $5 to $6 New Zealand per MCF. So fairly robust economics for development. We're about 400 meters from a pipeline, so can easily tie this in, given we've got consents now. The next big catalyst for us is Cuida. We're drilling the Cuida well. It's ERC Equipoise is giving us 9 million barrels of P50 prospective resources. Only oil for that. We carry 12.3 million internally. A 1 in 5 chance of success, so it's high risk, but it's also high impact. The wells typically come on at anywhere from 2,000 barrels a day to 5,000 barrels a day in the offsetting analogous field Waihapa. A well was drilled in 2012 by Kia Petroleum, who we picked it up off of, and it was called Douglas 1. They felt it missed the oil, it was below the oil water contact. They had good reservoir. The issue really is there oil above what they think is the oil water contact, or has the seal been broken? And so we'll test that in February of this year. So we're gearing up. Conductor's been set, the rig's been signed. We're getting ready to go on that one. PL17 is our first block in Australia. We're doing about 10 barrels a day from 2 wells, so 20 barrels a day. We've got just finished shooting 3D seismic. It's in processing right now. The data looks quite good. The key for this block in particular is it's a production license. We've now met all commitments to hold this block for another 21 years. We're not going to just sit on it, though. We're going to get after it. There's substantial running room in the size of the pools. 2 pools produced 150,000 and 160,000 barrels respectively. They've been mapped on 2D, albeit old 2D data, 70s vintage, to contain about approximately 1 million barrels each. The 3D is key in determining whether it was mapped as too big an asset or if there's potential running room to go further. There's also CSG potential and deeper Permian tight gas potential, both of which are probably for another company, and we'll look to farm that out in due course. Our work program so far, we've accomplished most of the things we set out to do this year. A few remaining bits and pieces. Cuida by year end. We hope to farm out and announce, hopefully successful farm out, but results of the farm out process for Cardiff by year end. We are also potentially farming out Cuida, albeit we're getting down to the wire, so we're not convinced we'll get a deal across the line. But we're also looking at 2 potential acquisitions. We're active in the various bid rounds. The New Zealand bid round, which announced, and results will be announced in December, and then we'll be active in the Australian bid rounds as well. So YTAG Oil, good cash flow, strong production base, great portfolio of assets, very good fiscal terms, so we respond well in a rising oil market, and just well positioned in New Zealand and Australia. So anybody has any questions, please see me after the presentation or later today or tomorrow. Thank you.